Hi, keeping up the theme of interesting backgrounds. I'm in Homebase. We call it Homebase? No, it's Home Depot. It's Homebase in the UK. Probably actually a better name. And it's pretty busy in here, and I'm thinking that Home Depot is going to do pretty well. The staff are certainly way more helpful than they used to be, and that's always a good sign. I found this 5 years ago at Best Buy. Suddenly I realized that the staff in Best Buy are super helpful and super nice, and the stock was tremendous from that point on as they got the customer service right, which is actually a total management strategy, if you could see it in the earnings calls. And speaking of earnings calls, we have an extremely busy week this week. I'm looking out for Diamondback, but there's hundreds. There's E&Ps, there's Midstream, there's Cheniere, there's all sorts of stuff reporting throughout the course of the week, and it's going to be a busy one. The big one left, obviously, is Apple, and the big kahuna is the Fed announcement. So those will drive markets. But generally speaking, we're looking here, even though the oil price remains disappointing, for a bounce in these names. I think results are going to be better than expected, certainly based on the gas names and what we've seen of the oil names. Hess is a special situation, great result, but you saw the Pioneer was actually a pretty good result, right? And I think all these oils, and we were just on a call with the Exxon CFO, their results were absolutely outstanding. And of course that's driven by refining, and we've got plenty of refiners to come. So it's going to be an extremely busy week. We're looking for a bounce in the group. We're looking for hopefully some kind of a breakout in oil, which just doesn't seem to be coming. I'm increasingly of the view that the US is allowing Russia to export oil to maintain low oil prices. And on Thursday, I'm hopeful that we'll get Torsten Slock on our happy hour, who's a wizard at strategy and economics. He was saying that actually rising house prices now present the Fed with a major inflation problem, because as we've all learned, if we didn't already know it, shelter is the biggest single part of CPI. Additionally, of course, gasoline prices at the pump, which is a much smaller part, are also rising, because one of the big surprises so far this year, and we've had some negative surprises, but the positive surprise is unquestionably US gasoline demand. So we're looking for a bounce in the group here, but not a huge one insofar as oil just can't seem to get itself going. And that's a concern, because it's seasonally such a positive time of year typically for oil. A lot of clients have pointed out that my friend Ed Morse, I would say more like a mentor, quite frankly, is kind of turning bullish. And we wrote a note for you yesterday which highlighted that in the grand scheme of things, the bull-bear cycle in oil is about productivity. And you can get very caught up in this year's demand and this year's recession and everything else. But as we show you in the note, actually the bull-bear cycles are all relating to the scale of oil productivity on the supply side, which essentially was negative, that is to say, improving productivity into the OPEC upcycle when OPEC obviously massively raised the cost of oil. You then had a down cycle, essentially, as North Sea and non-OPEC reacted to high prices very successfully, and demand also fell. And that was a long one. That was from 79 to 98, so that was a long cycle. We then had an upcycle with Chinese demand and the struggle for non-OPEC in the period from around 98 to 2012. And then, of course, we had the US unconventional boom from 2012, arguably to 2022. And you would call a top on US productivity in 2022. Ergo, we are definitely entering an upcycle for oil in the long-term sense of it. And this one could be a long upcycle, because now we don't have the short-term cycle supply response that we have with US unconventional. So our call is go long. Canada is obviously a long cycle call. And, I think that's the upcycle we're in. As for the short cycle, that's a tough one, because as we've said many times, distillate is looking rough, but gasoline matters more, and it's looking good. China is importing a lot more oil, but China is also exporting a lot more oil. India and Middle East are doing what we thought they would. There's nothing out there at the moment which suggests we're going to drive oil a whole lot higher, especially if the Fed comes in and puts another boot into the economy, which is 100% consensus that they raise again by 25 basis points. And that's basically going to be kind of negative for the economy. And of course, we had poor Jay Powell tricked by some prankster idiot into saying he expects essentially that we may have to have a recession here, and that's where the market's at. So essentially it's this dreaded call of, we expect a really short-term bounce, we expect to struggle through the recession, and then we have a mega bull case for the long term in oil and gas. Thanks a lot.